Selling winners into normal pullbacks is the hidden enemy you rarely admit to out loud, and it shows up as a small, steady leak that turns good trades into mediocre results. Picture this: you're up on a runner, the screen softens, your pulse quickens, and you chop your size because you can't stand the idea of giving back a few ticks. This script gives you a clear fix built on market structure, stop logic, and simple mental markers that help you actually let winners run. First, define a pullback once. A pullback is a counter-trend retracement inside an established trend, not a trend change. And treating every retracement like a reversal is the core error. The stakes are real because you trade probability, not certainty, and repeatedly slicing winners erodes edge over months, even when your win rate looks acceptable. The mechanism is straightforward. Fear of surrendering gains amplifies small noises into threats. Anchoring to entry price and loss aversion hijack size decisions, and adrenaline rewards immediate action while punishing patience. Those physiological signals compress your time horizon. You start micromanaging stops, and the market's normal ebb looks like a crisis. So here's the system, in concrete rules you can apply immediately. Predefine your base size and a max exposure cap before every session. Use structure-based stops tied to the 5-minute frame. Trail to the last higher low on the 5-minute when the trend is intact. Or place a stop below the most recent 5-minute structure low by a fixed buffer equal to your tick-based stop distance. Require a market confirmation before adding size. For example, 2 5-minute closes past VWAP with rising cumulative delta, or a trendline break plus a clean retest with a higher low on 5-minute. If you add only one incremental lot equal to 25-33% of base size, and only after that concrete confirmation. If price makes a lower low on the 5-minute, then exit full. If price holds a higher low and volume is below baseline, then reduce size, but don't flip to aggressive scaling. Small, disciplined moves beat heroic guesses. Practical sizing rules. Cap base size to a fixed fraction of capital, never exceed your max exposure, and set a session-wide notional limit to prevent correlation surprises. Add a 2-stage scale-out. Take a partial, say 0.5 R, at your first logical target. Then trail the remainder by structure, not by a mental hunch, until a 5-minute structure failure or a volume-backed reversal, session volume 1.2 times baseline on the break. I'd rather miss the first 0.5 R than donate 2 R to noise. Wait, breathe, check size, log it, journal tags to use. Pullback hold, size add, stop trail, and review structure. A short practical drill sequence helps move this from theory to habit. Drill 1, recognition. Review 10 recent winners and tag whether you exited into a pullback or held through. Drill 2, stop discipline. Run 5 simulated trades on replay using only the 5-minute structure stop and no discretionary tightening. Drill 3, add confirmation. Practice only adding after the concrete confirmation rules listed above, and do it with reduced size for 3 weeks to build trust. Include timers. After the first pullback, wait 10 minutes before you change your stop or size, unless you have a structural break. This creates space for the price to find its next higher low or lower low. Here's a time-stamped mini-case you'll keep. ES 9:42 a.m. Last Thursday, 2 5-minute closes above VWAP with cumulative delta rising, plus 0.6 R in 4 minutes. I held base size until a clean trendline retest at 9:55 a.m., added 0.25 R when the 5-minute made a higher low and session volume stayed above baseline, then trailed the rest below the new 5-minute higher low. Holding captured the larger swing and avoided noise that would have stopped me out if I tightened prematurely. I'll be blunt about a slip I made. Once, with coffee gone cold and fingers sticky from a snack, I pulled my stop in by 0.5 R after a sudden news ping and watched the move continue without me. Sensory detail, the screen glare, the sticky sound of my sleeve against the mouse, and the small sinking feeling afterward taught me more than any chart. Counterexample in trade-off, sometimes taking partial profits early preserves psychology and reduces stress, and that's a valid path. Other times, aggressive partialing kills expectancy, so pick one method per strategy and measure it, because inconsistent hybrid choices destroy variance assumptions. Implementation guidance. Build a one-page trade card that lists your base size, max exposure, structure stop rule, add confirmation, and scale out levels. Tape it to your monitor, or better, overlay it on your chart feed during the session. Optional B-roll. Checklist overlay, timer graphic, chart with HLLH markers. Protect your edge with 2 defenses, a session-wide exposure cap that triggers an enforced stop-out if you exceed it, and a cooldown protocol after a stop-out or major drawdown. No size increases for the next 3 trades, and perform a bias check before resuming full size. Keep your metrics simple. Track R per trade, percent of winners held past first pullback, and win rate conditional on holding past a 5-minute high or low. Review weekly and adjust rules based on sample size learning, not anecdote. Concrete if-then rules to memorize. If the 5-minute makes a lower low on confirmed volume, then exit full. If you get 2 5-minute closes past VWAP with rising cum delta, then consider a single add of 25% base size. If you mind trade under stress, then force a 5-minute cool off and don't move stops. A short practice routine. Before each session, set the checklist, confirm your max exposure, and script 2 self-reminders. Structure first, and size is a rule. Say them aloud. Mid-roll action. Pause the video now, open your journal, tag your last 3 winners with pullback hold or pullback exit, and note whether structure stops would have changed the outcome. Edge protection also includes correlation checks. Don't add size if multiple positions correlate and push you past your volatility budget. And a small emergency kill switch, a single key you press to reduce all open sizes to half if market action becomes chaotic. The psychology work is simple but stubborn. Train your body to accept small drawdowns inside a trend and to resist the itch to micromanage. Practice the drills until your hands obey the rules. Long-run perspective. Market noise will always try to convince you that control equals safety, but controlling control mistakes, size drift, discretionary stop tightening, and unvalidated ads builds consistency. One grounded opinion to keep: honest patience compounds better than clever timing. Close this session with a commitment. Pick one rule from the playbook, apply it for the next 10 trades, journal outcomes, and stay process first. The market is neutral, your behavior isn't. Improve that, and you improve your odds, slowly and reliably.